What's going on, traders? Hope everybody's having a great long weekend. Markets were closed on Friday, of course, and here we are on a Saturday. Going to go through some analysis of the S&P 500, the SPY, as well as QQQ, and take a look at some other data points that we like to look at that helps us build a game plan for the upcoming week based on our charts and data, not any bias. And of course, we're going to kick this off with going over the economic calendar first for this week. And then, of course, we'll get into the charts and take a look at the bigger picture and then break it down a little bit more granularly. If this is your first time joining us, I appreciate you coming to check out the video. And if you enjoy it, don't forget to subscribe to the channel. It means a lot to me. And for my normal listeners and subscribers, thank you so much again for joining me to navigate this market. Before we get into it, of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, with that out of the way, let's get into the economic calendar here and take a look what we've got on deck for this week. All right, let's bring it up here. Monday, we've got April 1st, April Fool's Day here. ISM manufacturing at 10 o'clock, and we do have Lisa Cook, Fed governor, speaking at, it's nearly 7 o'clock, so market will be closed. Nothing to worry about there. Tuesday, we'll pay attention to Bowman speaking at 10:10, Mesker speaking at 12:05, and then we have San Francisco Fed President Daly speaking at 1:30. So pay attention as we run through that gauntlet of speakers, but they are not done. Wednesday, we have more speakers on deck here. U.S. Services PMI on at 9:45. We'll be paying attention to that. Bowman speaks at 9:45. ISM Services 10 o'clock. John Williams to moderate a discussion here. I guess the Fed speakers must have some type of a major event here this week. Seeing them all speak, but we have Fed Chair Powell actually speaking at 12:10, so that will be interesting to pay attention to, see what he says. I think he spoke a little bit on Friday as well while the market was closed. And we also had that PCE number, which pretty much was in line, but we'll see how futures react when they open up. Right after Powell, we have Michael Barr speaking at 1:10, and then we have another Fed governor, but the market will be closed. Thursday, we continue the fun here. Initial jobless claims at 8:30. We'll be paying attention to that print, and then we have at 10 o'clock Harker. 12:15, Barkin speaking. Goolsby at 12:45, Mesker at 2 o'clock, and at the same time, Kashkari also speaks. So another gauntlet of Fed speakers on a Thursday to pay attention to, and we've got a big number coming out on Friday, April 5th. Non-farm payroll coming up, as well as unemployment rate and other data here coming in with hourly wages, all at the same time, 8:30, and then we round out the end of the week with more Fed speakers. Barkin at 9:15. At 11 o'clock, we have Lori Logan, and then we have Bowman again at 12:15. Consumer credit to end the week at 3 o'clock. So that's what we've got on deck. Tons of speakers, non-farm payroll, initial jobless claims. So a couple of definite things we want to be paying attention to. So let's see what the market gives us. All right, let's close this out and start to take a look at some charts here. We are pretty much, we could say we're at month's end here. So why don't we just take a look at what this monthly candle has printed. It's kind of been no surprise that this is another solid green candle to the upside, and now it's been 1, 2, 3, 4, 5 months of straight bullish momentum after coming down and retesting that 20 period moving average, little fake break, and retesting that neckline of the Head and Shoulders, which we had covered in depth as it was happening back in time. So another solid candle here. What do we've got? I mean, you know, from this bigger perspective now, of course, as long as these highs here hold, I mean, that's going to be our next kind of area, right? Until then, the market structure really hasn't shifted. So obviously this is a monthly, you know, time frame. So these are a lot wider ranges, excuse me. But as long as 505, 500 holds, I mean, there's really no cause to be, you know, even remotely concerned from the bigger picture. And, you know, if we start seeing, you know, weekly candles starting to close under that, monthly candle close under that, okay, now we can start singing maybe a different song and dance. But you know, this, you know, you can certainly, you know, say, okay, we're kind of, you know, we're making a rising wedge. Sure, that's all fair, well, and good. But really, until any uptrend really breaks, if you were to put, you know, any type of a trend, trend line here, you know, it's all for naught, you know. So until that happens, really, you know, it doesn't matter how many times, you know, you do this, or, you know, however you want to draw it, right? And obviously the steeper that it is, you know, the more kind of risky it gets. We certainly are extended, you know, this highest price here. We are extended from these major moving averages. So, you know, that is something to consider. And we do have still these overbought conditions, but again, until the chart really tells us, it's all just conjecture. All right, let's move it on here to the weekly chart, and a similar situation coming in, just bull flag after flag, pushing us up higher. So what are we going to look for? Now, inside week has been printed. You know, we're going to get some of these kind of these range days on this trend, you know, while we're in this trend, you know, because the market, of course, has to take a break. Can't just keep on going. We're not going to see these huge weekly candles every single week, but we also do want to note the size of the candles as just maybe an inclination of potential slowing down in any type of momentum. But you know, from the weekly perspective here, you know, as long as we hold over this range, right, and basically it's the low of this week, which, if you want to get really specific, for it would be 518.40. I could even say, I could bring that down to a little zone to the whole number there at 518. So as long as we hold over that, you know, all things are well and good here from the bullish perspective. And, you know, it's possible what we may end up doing is just riding here sideways, maybe in a little bit more of a consolidation pattern to potentially build up power for the next move. Still looking at that kind of that 530 area. 535 is the next potential upside target. But if this does actually build into a weekly flag that has some momentum with more volume, I mean, 540 really wouldn't be out of the question. We are at the top of the volume profile here, so we do want to be cognizant of that. Price is slightly, you know, on the weekly, it's definitely getting suspicious as far as the extension from the 9 here. You know, in last week's video, we were talking about how nice this price action was, just kind of traveling right here on the 9, really not getting too far away. That's a little bit concerning now when we kind of look at that, and certainly from the 20-day here as far as that space. So we do want to pay attention to that. As well as we just kind of monitor that extension, right? Again, but these are just kind of, you know, things that, again, that doesn't mean you go ahead and just short looking for a mean regression trade, which, you know, who knows, that may happen, but, you know, just little puzzle pieces that we can say, okay, we want to be aware, we want to have this kind of things in the back of our mind. You know, as we move along. But so as long as we hold over the, let's see, the week of the 4th here, March 4th, that high was 518.22. So you can see it's pretty much, we came back in, retested the prior high there, and we held, and we really kind of came in and made, you know, you could call it a new high. It's kind of nuanced, a higher high. I don't think it really qualifies as a higher high for me. We didn't really close outside of the, you know, that previous range right here. we just made a print, a couple of cents higher. So we'll see, as long now, from the weekly perspective, as long now as we are contained within this area, we will continue to range and balance. But I would definitely be paying attention to, the prior week's highs here and lows, and that way we can have some kind of a bigger picture idea is when we actually see a break in either direction, whether it's under 518 or over say 528, we can say 65, 75. Then we are going to see the bigger move that's going to give us the breakout, right? But until then, we are likely to adjust a trade like this, and we have to wait to see whether we get that scenario or we get this scenario. Which one will it be? I do not know. But that's why I'm not really here to try to predict. Obviously, we have our theses, but we'll let the chart tell us what it wants to do, and then we will follow suit. All right, so let's pay attention to that. There's your weekly levels. Have them, know them. Let's pay attention and just kind of be cognizant of being just careful, and as we say, don't diddle in the middle. So, I mean, obviously there are trades here. There's a range here that's tradable, but, just having a background picture in your head, okay, don't expect too much. Temper those expectations until you really see those moves over or under 4, and that's going to really spark the bigger move, whether it's going to be to that 530 or maybe that regression trade back down into the weekly 9. Let's take a look at the daily chart here and see what we can take away from that perspective. The last thing I will say, though, we are still monitoring. Now, we were noting that kind of, we've been noting the overbought conditions that I already mentioned on the monthly chart, but we were watching them here on the weekly chart as well. We were looking at this kind of momentum potentially shifting here, coming down, but you can see the bulls have come in again and kind of resparked the wick there, so to speak. But again, we are still in very, very spicy up here, so I'll still watch that. But there you go. It's turned it green again. So that slowing of momentum kind of has been invalidated for now. All right, let's get into the daily chart here, and this really is going to illustrate even clearer that range that we have been trading, and this is the time that a lot of traders can have difficulty when it is trading back and forth like this. And of course, this last week was especially difficult considering it was a short week coming into a major holiday. So that also can produce really less than favorable price delivery. So that's when you also need to be careful when you have these kind of events kind of going on here. But we can see again here the range pretty clearly now on the daily. Now that we're getting a little bit more granular, we can kind of put in a half back here, a half gap. We can call that maybe say for what is this, 521.45 thereabouts. So maybe it even could be just a little bit lower when we get above 50. I mean, yeah, it's really pretty much in that area. So really, from the bigger picture, if you're looking for short-term swings within this range, which is possible, if we're closing under basically this 521.45 area, we can look for trades to potentially, and also a bigger picture, we can maybe also have this to kind of give us a bigger intraday a bias, or just keep this in at the backdrop of our minds. But under this area, we can look for potential trades to come back down into the bottom of the range. Now again, will this be supported? We don't know, but especially on a trend down day, if we see SPY coming into this major area once again, okay, that might be like, okay, well, here we want to be trying to shoot for the long, and first target back up into this area, seeing if we can get back over, and then ultimately come back into the top of the range. The other way, of course, we can look at it is that if we are seeing daily closes over the half gap here, we can look for this, and then we can look for trades back up into the top of the range here, closer to that that 520 5 zone. And then, of course, you can potentially look for a short with a nice small risk to reward there to look for the rejection. But, of course, if it breaks over, you want to get out of dodge. And then, of course, on a bigger picture, we're looking for something like that, to come up, come back, retest, and then we look for those bigger moves and those targets that we were talking about on the monthly chart here just a moment ago. So we shall see which side will prevail. All right, but let's talk about some day trading here a little bit on a SPY and kind of break it down in a little bit smaller viewpoint, so we can look at it like that. Here is our range, and okay, let's do this here. Okay, there we go. All right, so we already kind of know the highs, right? And we're just in this chop zone. I mean, especially kind of in this, over the last session, this previous week here, as we kind of have already been over, and you can kind of see. But I think from this viewpoint, really what we would want to be looking at, I think that, and I'm going to kind of go over the bearish side because there's kind of more to talk about in this case, because really, I think here from, we're breaking it down, this 420, this 522 area, want to hold these highs here. You can see we came down, didn't really break it, when is this, from the Wednesday session, never broke under that. So as long as this area holds these previous highs, you can see here, you can even do a little supply zone or a little demand zone, something like this down to that 521.85. Really, as long as this holds, we'll be looking for the potential long trade. Am I really interested in a long here? No, not too much. I probably would want to see at least a move over these what is this, Thursday session highs, around 423.75 thereabouts. But really, we've also got the last week Thursday here, kind of in this area. So it's tricky, right? It's tricky, and to be honest with you, I think the most sensible thing really to do is to actually not even trade this until it breaks. I mean, the range is okay, 521. I guess this maybe 520. This is barely 521.85, 520, 522. It's a $2 range you're really trying to work with. So honestly, it might be better to stick with those relative strength names and just keep an eye on SPY and the indexes and see when they actually break out of it. And that really might give you the better trade overall. But I was going to say, if we do start to see some acceptance underneath this area here, then we can look for, those moves back down. Maybe we'll come down an area where I would be paying attention. I'm going to zoom in here. Let me get rid of that. Okay. I would pay attention to the highs right here where we had this shift in the market structure here, which also was the lows here from the 1 o'clock lows from the, I believe this is the Tuesday session. So let's pay attention to that. So I think that under this 521.85, we could potentially see some sells down. I would still be a little cautious right here around 521.40. But that starts breaking down. I think it's very possible that we would come back to retest this 520.48 area here. That would also be a retest of this extended volume profile, and that's the value area high and what are we on a 15-day hourly chart. We start getting under that though. It wouldn't surprise me to come back and test the lows here from the Wednesday session, and that would probably be down maybe 520, 419, 50, 75 area. I would watch that as the next downside target if in fact they are able to break this again, and then of course if bears are able to give that up, I would just be targeting right back down. And this would keep us, of course, in basically the overall range, bringing us down to these lows here. And also that's going to bring us down into this lower, this lower volume node once again here, which may, this thin structure may need to still get worked out. So we'll still be paying attention to this LVN here, and I think this was the FOMC pump. We were talking about that kind of thin structure last week that had been formed in this area, and that we wanted to pay attention to see if they would start to fill that out. And they did definitely bring some more volume and balance into this profile, as we had seen that big down move on the Tuesday session at the end of the day, right? I mean, big, these are huge rebalancing moves here, boof down and boof up, right? So didn't quite fill all of it. You can see here there's still a pretty decent void here, and that's all created from this move. So we'll keep an eye on it and see what happens if they actually start to get into any of that area. If they do, if we were able to crack, if bears got under the 518 area, look for them to fill that out, the LVN out. Maybe we get down to 517. Maybe the next area would be just the highs of that breakout from FOMC at this like 516 area here, 516's half maybe. But for the bulls, up here, it's this, all-time highs are here. So, this is just kind of no man's land up in this area here. But really for the bulls to see the big move, and we've got plenty of areas here which could be supported, where, it might offer a better risk to reward. If we came down to this 522, we would want to potentially try to take that long, at some at-the-money calls. Or something for the moves back up. But right here, I don't really like the, if we just opened here at 523, would I really, be that interested in a long? Well, my risk to reward really isn't that good here. So you really kind of stuck in a rock and a hard place. Either we dip down and we get a better risk to reward that way, or again, we wait for that break of the highs again and a retest, and looking for that type of move. But let's be also very cognizant if they present to us another look above and fail like they did here. That could also really give us a nice short opportunity as well if we see it break over and fail back under, and then we take that short for the rope-a-dope, as it's otherwise known as. All right, cool. That's pretty much all I wanted to go over for the SPY day trading levels. Let's get into some QQQ really quickly, and we will just start off with the weekly here. We don't want to make this video too long, so we will just start here. Now the Qs did not, last week had made that new high, but where SPY this week did, Qs did not. Still same situation, inside bar. You can clearly see the balance range that we have been trading in. So it's very much the same song and dance as far as what needs to happen for us to really see the bigger move take place, right? And from this weekly chart perspective, I'm going to certainly be paying attention. This one, because we have these, the high here that we broke out of. So I'm gonna pay attention to this what is this, 437.25 area, 437, 439. 430, maybe 440, 439, just under that. So under that 440, so like 439.75, somewhere in that zone there. I'll still be paying attention to this range, but it's not really the major level here on the weekly that's going to need to hold. The major level is going to be the low of the week of the 11th. So that's really the range that, for me, that the Qs are trading in. But I am still going to be cognizant again of the highs here from the start of this February. So, we could come down even a little bit, but, like I said, this is really the range that, we have to work with here but maybe under that 437 or so could be a warning sign for maybe another $3 or $4 drop down into that 432 zone. So we'll see. That's probably what I would kind of look at it as. Definitely not going to definitely should pay attention to the weekly 9 here sitting anyway at 435.70 as it stands as well, and that's kind of in that zone. So if we do have those red down days and you are bullish, hey, that might offer a little bit of better risk reward for that potential breakout. Really, 449.35, sure, but really at that point we're gonna look. It's gotta get over 450. That's gonna be the big breakout level. Now the Qs. One thing interesting here on the overbought readings on the Qs is we saw on SPY the little uptick, right? The little igniter on the wick there. Here on this one we don't have it. Okay, and we're still showing. So this one, the market overall here says it's a little bit weaker than SPY, and I think that's reflected in some of the downturns that we've seen in some of the semis. It hasn't been too drastic, but they definitely have cooled off versus how they were in the last the month or two prior to this. So all right, let's continue on here. Let's get into the daily chart. We've got our kind of the major weekly levels now worked out for us. Let's take a look at the daily chart and see what we can take away from that perspective. All right, so, gosh, let's put this volume profile looks like Swiss cheese here with all these LVNs. Anyway, okay, so, I mean, we did close above. Let's watch that daily 9 at that 430, 444.25, we'll call it. Starts getting under that, and I think 441 is probably in the deck. We'll probably trade down there. It's not too far away to hit the 20. Just a $2 drop. So I would also pay attention to that 441 area as a potential move we could get, or somewhere that could offer us a little bit better risk to reward. That is where the 9 is standing right now, but of course that will change. But I do also like that level because you do also have some confluence here on the day of the 23rd of February, a little bit of confluence there, as well as that being the high of the session of March 18th. So kind of a nice area there potentially if you're bullish. A little bit of more of a this is obviously a daily level versus these two bigger weekly levels, but market obviously has been so strong, so I don't even know if we'll get down to those areas for that better risk to reward. So from the daily perspective here, this 440, we can even call it 441 if you would like. Could be a nice potential pickup there if we do start seeing the sells, and of course then you're looking for those equal highs, looking to really to get over that 450, and if that happens, I mean, it's a free and clear, probably another $10. So a 460, 457, 460, ultimately I wouldn't see it being that hard for QQQ to get there. Daily though has cooled off, right? I do like this on the daily. Not SPY on the daily is still a little spicy. It was up in the giving us those readings, the 10. I do like how cool how tech is trying to cool off here. That is a little bit encouraging, giving us a little bit of a breather, a little bit of a reset, so that way we can get back up in there and max out these overbought readings once again for the next rally higher. But we'll see. Certainly under that 441. 440.75. I think that would be the next warning sign, that we would come down into the weekly warning sign pivot at that 437 area. Under that, again, that would be the warning sign for me that we were going to test that bottom of the range down here at that 432.5 basically zone. So that's what we got for the Qs on the bigger picture time frames. Let's break it down here a little bit from a day trading perspective. Okay, let's do that. Okay, what do we have here? All right, so still we're going to note the LVN right here that has been created. I do think here we've got the hourly 200. Pay attention here to that sitting right. Oh, that's basically at 443 more or less, 443 half. We can kind of I think for the Qs here, you can basically we can build up. It's at about $1 range. I don't know. That's a little bit tight for me. I guess we can do it like that. That's fine. As long as 442 holds, bigger picture, or not bigger picture, but at least from the hourly point of view, we could still look to buy dips. I'm going to be looking at 443, 443.50. This daily 20 or 200 here has to hold. If this breaks, I think that would be more likely. Under the so basically under 443, I think it would be likely that we would trade back down into this small supply level that we kind of had built up on the Thursday. No, this was the Wednesday session when we saw that nice end of day squeeze. But under that, I'm going to be looking if they are able to break. Just check out. I think probably we would come back down, retest right here, and I would be looking kind of into this zone as a next downside potentiality. Bring this 441, 440, 50, 36 in that area. I would look at that as a next potential downside target zone, if only if they start to break under 441.90 area. So let's see. Ultimate area here, though, maybe after you cover, it could be a spot for a potential long coming into, maybe they could come down into these highs. So they could just bring it down. If I was long at this in this 440, even 50 area or 36, my risk would be, seeing some closes under that 440. So I think that still would be, an area we would want to watch, whole number, and you do have this high here. So you could certainly extend that, this kind of zone, but I think that this is fair. But really, so that's what we could look for on the downside, and potential buys in any of these areas as well. If we do see that sell. But if you want a little bit more confirmation, we're probably going to have to get back over the volume point VPOC here. 445.70, we can call it 446, right? We can see a little bit of that supply area. You can see we wicked, could not get over this zone right here on the Qs. So that's really going to have to be recaptured for the bulls, for the chances to come back up higher. I'm going to mark this off 445 to basically 445. I'm going to say 446. Honestly, we've got to get over the VPOC. That would give me a little bit more confidence or faith in the move. But we start getting over that here, 446. I would be targeting up here. It's only about 50 cents higher, but got to give what the chart, got to take what the chart gives us. I would probably be targeting up here, and then if we did get over, I would be looking up into the 447, maybe half area here, see about a potential triple top. But I think that if we got over this 446 half, that we'd be likely to move up maybe another, just shy of another $1, maybe 80 cents, 75 cents or so, to look to see into these equal highs is what I would be looking for. Hey, if they're able to get over that, well, then the bulls could target basically almost another $1 again, 448. 448.50, anywhere in that range. Over that, and then the ultimate target's going to be back to 449 up here. So we'll see who wins on that mode. All right, cool. We've gone over all our charts for tech and for this SPY. Now let's go into some of our other data points. Again, I appreciate y'all spending the time with me today on this glorious Saturday, preparing for the markets. Okay, really appreciate that. Let's look at the Dixie. Okay, let's get into our daily charts here. I am swinging some gold calls, and it's kind of it's it's a tough trade here because really the dollar looks bullish still. I do like here. We did not accept over this this 404, this net 404, this 104.50 pivot. Okay, that is good. I do like that. But it basically closed right on it. I mean, it was I mean, it could really go either way here. Let's start seeing some acceptance under, let's start seeing this. If we start seeing this, gold will continue to go up, and gold does look like it's going. It wants to go up more. But that's what we want to see. Until we get under this 104, it's hard for me not to be still bullish on the dollar. We could just come into here. Hopefully, maybe we would double top. Maybe we only get a small rejection, and then again, just like we were talking about in last week's video, this 105 area. So is going to be very is going to be the widow maker, I think, for the market. Hopefully, we don't get there, but we'll see. We were talking about this cross coming in here. If you are and do trade these kind of crosses things, I do not, but it is, people look at it, so you got to at least be cognizant of this momentum with the moving averages, with the 200 making this shift overall. Here's my okay. And, okay, so, yeah, I mean, unless we get under 103, I mean, again, 104, yeah, but 103.70, really need to see price under that. And then we can potentially come back into the 103, and this would really help the metals trades. So, I hate to say it, bullish till proven otherwise, and it still looks bullish. TNX. Let's look at 10-year here. Loads. Is this gonna load? Okay. Oh, wait. Having some internet situations here. So I lost connection to the... Come on now. Alright, I'm having internet issues. Perfect. Just what we needed. Alright, well, this might be a shorter video than anticipated. I don't know what's going on here. Okay, I think we're back. Or is this just because it's in my cache? So it's a stock I haven't looked at in a second. Okay. Yeah. Alright, well, I think that's going to be about it. Or I might make a part 2. But at least all the levels for SPY and that stuff is taken care of. So, alright, shorter video this week. We're not going to go over any of the other data points. But thank you so much again for joining me. Apologize for the technical difficulties. I am not sure. Let me just open up my web browser, see if it's Thinkorswim or if it's... Oh, it seems to be Thinkorswim. Okay. Alright, let's do this. Give me 2 seconds. Let me close out of it. wonder if they're doing maintenance. I'm stuck on the installing updates screen here. Alright, it seems to be a thinkorswim issue. I'm going to try one more time. But yeah, thank you so much again. Be careful with, keep everything in mind with the bigger picture, with the weekly balances. And, remember to plan your trades and to trade your plan. Remember, a profitable trader is a prepared trader. So let's stay focused. Last week was very difficult. And let's just keep that bigger picture stuff in mind. And I think that's about all I've got. It is still not opening, so I'm going to shut it down early. Again, thank you so much. If you enjoyed the content, don't forget to subscribe, turn on that notification bell. It means a lot to me, and it is a simple thing you can do. All right, take care. Have a great rest of your weekend and holiday if you celebrate. Bye.